Mr. Arvind Kamath. He's Chairperson of JNK India. Joins us right now on the show to tell us more about JNK. Now, of course, Mr. Kamath, good morning. Thanks for joining in. When your issue came about, sorry, you're on mute, Mr. Kamath, I think. You'll have to unmute yourself. But yeah, okay, now you are on unmute. Fine, fair call.
Yeah.
Mr. Kamath, good morning to you. Neeraj here. For a lot of uninitiated people who may not know too much about JNK India, could you just tell us what exactly does your company do?
Yeah. Hi, good morning, Neeraj. Hope you can hear me now.
Loud and clear, sir.
Yeah, thank you. So basically, yeah, JNK, we do combustion equipments. That's basically heating equipments. That's fire heater, reformers, and cracking furnaces. These are kind of like basically equipments based on combustion technology. So we do thermal designing and also mechanical designing, and then engineering, and also equipment manufacturing, and then supply, and then installation at site. So it's kind of a full gamut of from start to beginning. In the in all the process plants, basically at the beginning of any of the process plants, we have fire heaters. When we need to heat any of the liquids or gases to start a process, like whether it's a refinery or a fertilizer plant or a petrochemical or any kind of these plants, that's wherein we come in. And as exactly you said, we are, I would say, one of the only Indian company who are in the complete gamut of fire heater, from fire heaters to cracking furnaces.
Wow. Okay, Mr. Kamath, so what's the end user industry like per se? And the report stated that from what the market size was in FY24, the market size may double by FY29. I'd love to understand where are you on the value chain in this market? And if you are the only one, is the whole market up for grabs for you because it's largely unorganized, or is the structure slightly different?
That's absolutely true. The market is going to double in next 5 years in India, mainly because of the petchem capex, which is expected. As you know, I think the PSUs like BPCL Bina, VOCL Paradip, and also GAIL have announced their petrochemical cracking complexes, which will have a large opportunity for us. And this is a completely organized sector. I mean, just to clarify, this is not an unorganized sector at all. This is a very high-end equipment, which predominantly were, there were European and Korean manufacturers. Also, one of the other manufacturers is Larsen & Toubro, which does for a very high-end opportunity like a cracking furnace. And now we get accepted and approved for most of these opportunities. And yeah, just to convey that message, the complete market is up for grabs for us as JNK, along with our technology partner in Korea, JNK Korea.
So Kamath, hi, good morning. It's also Samina joining in. We've tried to understand the end industry contribution, and I believe 77–80% of your revenues come from the oil and gas refineries, right? And 60% I believe comes from petchems. You want to just tell me why so? Is it because your strengths lie to service these verticals, or is it just the way it is and you would consider diversifying, because this is too much focus only on one sector, I would imagine? And if the playing field is so large, then you want to sort of go out and get as much as you can.
Yeah, definitely, Samina. And just to clarify, basically, see, what happens is this mix depends on the projects which are coming up. Like we were comparatively smaller size in last 2–3 years, so that's how you could get a one large project from any one of the project will look like we are focused on some sector, but it is not like that. Now we have a lot of opportunities in petchem. So the petchem would play a kind of a majority sector for next 2–3 years. But overall, we have the oil and gas, like the refinery, petchem, fertilizer, gas processing. So these are the kind of sectors which we are focused as on now. But going ahead, we are also focused on the renewable sectors like green hydrogen, CBG projects, energy storage, which will be in the renewable cycle as well.
So Kamath, help us understand this better, because like you said, you only have the listed competitor in India is L&T. So we're very little in terms of knowing the business better. What is the average size of the orders that you usually get? And this could be across the industry. Give me a sense of the margin profile and the timelines on completion. And also help us understand the payment cycle, right? Because is this lumpy? Is this evenly distributed through the year? Is it that you bag an order, then you wait it out? Break that down for us, and also the average ticket size.
Yeah, sure. See, the average ticket size depends on what kind of a product it is, because some of the opportunities we just design engineering and do the supply. We don't do the installation. And sometimes it is a large project where we do the installation as well. So ticket size could vary anywhere from 50 crores onwards. It could go up to, say, 2000 crores per contract. So currently what we have executed or what we have in hand, one of the large size contract is about 400 crore and 350 crores, etc. And in terms of the timelines, most of these in the beginning of any capex cycle of a plant. So it starts anywhere from 1 year, and the completion period is around 2 years. So I would say 1 to 2 years is the kind of execution and completion period. And in terms of the payments, yeah, it's kind of a bit on a, we do have a bit large working cycle because of mainly because of the PSU contracts. In PSUs, we don't get much advance, but it's more of progress payments, which is, we receive after, say, 6, 8 months down the line.
Okay.
And as long as the margins are concerned, we have, historically seen a margin of about 16 to 18% EBITDA in most of, our financial years. But depends on the contract to contract. Yeah, some large contracts could have a comparatively lower margins, and some of the niche opportunities could have a comparatively higher margin. But on average, we are confident of maintaining this EBITDA on an annualized basis.
Okay, so about 17 odd percent or 18 odd percent EBITDA margins to be maintained. Can you tell us, Mr. Kamath, what the order inflow has been over the last 12 months? What would the current outstanding order book be? Just the secured order book, not where you might be L1. And what is the outlook of order wins, let's say in the next 3 to 6 months? Because I would presume, Mr. Kamath, that if the petchem cycle is what you're betting on, then a lot of plants would probably need to give you orders in a hurry before the year ends. That's what at least companies in that space have said, that they are embarking upon a fairly brisk capex plan. So are you expecting heightened order inflows in Q4?
Neeraj, I mean, just to clarify, I'll give you a overall
Please.
journey for last some time. Yeah, the Q1 we have seen an order inflow of 708 crores, which have been one of the fantastic quarters, mainly because of a cracking furnace order. So this is the first cracking furnace order which JNK India has directly received. And the Q2, our order inflow was about 170 crores. Here also we have received a technology-based process plant order from a PSU. So this is a TDAE process, which is like a treated distillate aromatic extraction, which is used in the tire industry. So this plant also we are building now. And in terms of the opportunities, yeah, in my last NDTV Profit also, I said big pipeline, we have about 4,000 crores. So that stands is about 2,000 crores in the domestic market and 2,000 crores in the export market. But this would get largely kind of finalized in a year's time or so. Though what you say is true in terms of the PSUs are looking for a very fast capex into the petchem opportunities. But yeah, BPCL has finalized the contract with the licensors and with the EIL as a consulting company, and same as IOCL. But the actual order to be placed in terms of the cracking furnace, it would still take some more time. I mean, we don't really expect that this would get finalized in the Q4. It would actually would get finalized in the next financial year. But nevertheless, we do have some opportunities finalization for something like, say, 800 to 1,000 crore finalization in Q4. So, we'll have to see how much we could expect out of that.
What's the current outstanding order book, sir? Sorry, I missed that number.
Yeah, current outstanding order book as on Q2 end is 1,311 crores.
And Q3 end, I mean, you now have a fair sense of what's happening in Q3 as well.
No, it would be, I mean, it would be something like that. I mean,
Something
but we
like
have
that.
execution also in Q3, so it could be a bit lower. Yeah,
I get the
but
drift.
but
Okay.
that's fine because, we do have a complete visibility, not only for this year, for next year as well, Neeraj. Yeah.
Okay. Mr. Kamath, so I'm presuming that you are competing both on the global scale and the local scale. When I look at your numbers, right, I mean, the estimates that some people have is what, 700 crores for FY25, ballpark, give or take a few here and there. Would that, if that is a fair assessment, I would love to understand. You told me that the market size is 27,000 crores by FY29. The global market size could be double that, right? So let's say 55,000 crores. You told me that the whole market is up for grabs for you, despite L&T being a competitor as well. You are at 700 crores right now. I mean,
Yeah, but neither, no, just to clarify, this 27,000 crore and 55,000 crores is 5 years cumulative figures. What
okay.
even Anandati and FN has studied, it is
Okay.
not an annual figure.
Okay, it's not an annual
It's,
figure.
yeah, just to clarify that, because
Okay, fair call. But even if I
But
split it up, right,
yeah,
say 5,000 crores annually, give or take, right, you are
yeah,
probably at
correct,
700
correct.
crores hypothetically by end of
Yeah.
FY25.
Could be, I mean, yeah, nice, yeah.
Give or take. How
Yeah.
much, I mean, is there a vision of what you could be like, let's say 3-5 years out? I mean, I have brokerage estimates till FY27. So analysts already expect 1,200, 1,300 crores. I'm sure you have a vision which is further than that. Give us some sense.
Yeah, absolutely. I mean, I think, yeah, we have a vision which is further than that. That's how we are, kind of growing our capability in terms of various product lines. As I said earlier, other than, incinerators and flares, and also the technology-based process plants, and hydrogen and CBG. So these are the renewable sectors as well. So we definitely look, to grow whatever the much better than what analysts have projected in next 3 years or so.
Okay, so better than that,
Yeah.
that as well. But do you believe that the current cycle, if I can use the term cycle, I'm not saying you're a cyclical industry, but this current cycle that you are in, which is a high growth cycle, do you reckon this can last well until the end of the decade?
See, as on what we have already seen is at least for 5 years, we have a pretty good project outlay and opportunities coming up. And beyond that, it's a bit difficult to say as of now. So only thing is, we are getting ready in terms of various, technology products,
Love.
and also the other areas like waste gas handling and the off gas handling, and also into renewable energy, so that we are ready even if this cycle kind of bit tapers down, so we are able to grow the as far as the company revenues and company performance is concerned.
Got it. Mr. Kamath, one final question. I see that you have negligible debt or zero debt, if you will, and correct me if I'm wrong here, right? Are cash flows and accruals strong enough for your company to be able to fund this deliveries over the next 5 years, or do you foresee a need to either raise debt or raise equity capital, depending on what your DNA is, of course, over the course of the next 12 to 18 months?
Definitely not course of next 12 to 18 months, Neeraj, because we just had an IPO just 7 months back. So
Huh.
we definitely want to. What we want to do is at least next 2 to 3 years, we don't want to go to the markets or to the take additional debt, or in this time. But it's difficult to say for 5 years, because depend considering the growth what we are having. So maybe after 2 3 years, we may have to look at some of the options available. But yeah, as of now, we don't have any debt, but what we have is a kind of a bank guarantee line, because non-fund based limits, which is about 400 crores, because that's what is required to basically to get all the limits and submit all the bank guarantees for all the contracts which we're having.
Got it. Well, Mr. Kamath, all the best. I presume this is not a very high competitive intensity sector, and you have an edge in technology, so hopefully it augurs well for you. Thank you so much for talking to us today and giving us your thoughts, and wishing you all the best for a strong 2025.
Thank you, Neeraj. Thank you so much.